Hi everyone, it's Harry. So, happy holidays. Hopefully, everyone's enjoyed their Christmas and New Year. Thought I'd begin the new year with the wrap up of last year's data. What have we been seeing? Well, you know, kind of ended with a whimper. What I thought would happen finally actually materialized. Basically, last year's average was kind of within 1% of 2024's average. The things that went up came back down, obviously affected by what the tariffs have been doing, and and indirectly from that, all the labor strife we've been seeing as people try to deal with inflation pressures and looking for more revenue from their workplaces. So it's indirectly affected our overall housing market to the point where we've stayed stable to the previous year. I expect 2026 to be the very much similar to 2025. Will be range bound. We might see an inflationary increase of about 2% in overall pricing. But what I've been noticing for the last, I would say almost 2 years now, is that we're range bound with respect to detached home pricing, somewhere between 775 and 850. Right now we're in that 775 period. I could see us bumping to the top end of that in spring and then backing off through the fall. And I'd say a similar thing would be available, would occur overall, where we're at the bottom of the range at around, let's call it 600. Top of the range is 650 for the total Calgary market. We're right now near that bottom range. I expect us to potentially pop up to as high as 650 in the top of the spring market and then back off again. Don't expect too much in the way of increases except due to inflation. We saw this pre-COVID where Calgary market just grew by inflation. It was pretty much range bound. So what do the December numbers show us? Well, with regard to the overall number, we were at 1126. That was down 15% from last December. We are at 3.4 months of supply, which is basically saying we're balanced. Inventories at 3860. It's up 29%. So although the inventory is up, it's not hugely up in the sense of it's pushed us into a buyer's market. The average price for December overall was $607,000, kind of like the average for 2024, which was about $607,000. It's quite interesting, and that's kind of the average what we expect for 2025 as well. So here we are. We're all kind of balanced out, and we see similar effects because the detached market kind of drives our overall market. The average price was 774, 263, averaging 808 for the year, up only about a percent from 803 from the previous year. So we're a little down at the end of December. People obviously don't like moving at the Christmas month. Our sales were 587, well 4% down over the year, but we're still at 2.7 months of supply, so we're in the balance scenario. If we look at the other markets like the condo markets and even the semi-detached markets, we are in a buyer's market in those scenarios, but prices haven't really collapsed seriously. We've returned to kind of the averages for the year for the most part, or might be slightly down a little bit, but not significantly so. Again, we seem to be trading. If you're a stock guy or gal, we kind of are trading in this channel that I think will last at least till the midterm elections down south, which is another year out. So I can just see us just bumping along. So it's a good time to buy and it's a good time to sell. if you're buying, I'd suggest buying before the spring market, which is typically the beginning of March. Uh, and if you're selling, wait till the spring market. Otherwise, please reach out if you need any real estate services, or if you have any questions. Again, please reach out. Always willing to chat about real estate. It's kind of it's my bread and butter, but it's also what I'm invested in. So have a great new year. Otherwise, hope to hear from you in the new year. Bye now.